Hey everyone, welcome to all of you. We are diving deep into the fascinating world of financial markets and their types. Whether you are a finance engineer, a student, or just curious about how the global economy works, this video is for you. We will explore everything from the basics of financial markets to their intricate workings, types, and real world examples. Let's get started. Before we jump in, here is what we will cover today. First, what are financial markets and why do they exist? Second, their key functions and importance in the global economy. Third, the different types of financial markets: primary, secondary, money, capital, forex, derivatives, and commodities. Fourth, a detailed comparison of primary versus secondary markets. Fifth, money markets versus capital markets, what sets them apart. Sixth, real world examples and trends shaping financial markets today. So let's start with the basics. What exactly are financial markets and why do they matter? Financial markets are platforms or systems where buyers and sellers trade financial assets like stocks, bonds, currencies, and derivatives. Think of them as the engine that powers the global economy. But why do they exist? Well, financial markets solve a critical problem. They connect those who have money, means investors, with those who need money, means governments, corporations, and individuals. For example, when a company like Apple wants to raise money to build a new factory, it doesn't go knocking on doors. Instead, it issues shares or bonds in the financial markets, and investors like you and me can buy them. Financial markets also serve three main purposes. First, facilitating capital allocation, moving money from savers to borrowers. Second, enabling price discovery, means determining the fair value of assets based on supply and demand. Third, providing liquidity, means ensuring you can buy or sell assets quickly without drastically affecting prices. And who is involved? It is a mix of banks, investors, governments, and corporations, all playing their part to keep the markets running smoothly. Banks, investors, governments, and corporations all work together to keep the wheels of the economy turning. Now, let's break down the key functions of financial markets in more detail. Liquidity provision. Imagine you own shares of a company and you need cash urgently. Financial markets allow you to sell those shares quickly without having to wait for a buyer. This is liquidity in action. Risk management. Financial markets offer tools like derivatives, futures, options, and swaps that help investors hedge against risk. For example, an airline might use oil futures to lock in fuel prices and protect itself from price fluctuations. Capital formation. When companies or governments need money, they issue securities like stocks or bonds. Investors buy these securities, providing the necessary capital. This is how new projects, infrastructure, and innovations get funded. Price discovery. Financial markets reflect the true value of assets based on supply and demand. For instance, if a company's earnings are strong, its stock price will rise as more investors want to buy it. These functions are what make financial markets so essential to our economy. Without them, raising capital, managing risk, and determining prices would be incredibly difficult. Alright, let's dive into the types of financial markets. Financial markets can be categorized in three ways. First, by instrument: stocks, bonds, forex, and derivatives. Second, by maturity: money markets for short term and capital markets for long term. Third, by structure: organized exchange like the NYSE or over the counter OTC markets. Let's explore each type in detail, starting with primary and secondary markets. Let's start with the primary versus secondary markets. In the primary market, new securities are issued. This is where companies raise capital directly from investors. A great example is an IPO, initial public offering. When a company like Tesla goes public, it sells shares to investors for the first time in the primary market. In the secondary market, existing securities are traded. This is where most of the action happens. For example, if you buy a Tesla share today, you are doing so in the secondary market. So primary markets are about creation and secondary markets are about trading. Got it? Great. Next up, money markets versus capital markets. Money markets deal with short-term instruments like treasury bills, commercial paper, or certificates of deposits with maturities of less than a year. They are low risk and highly liquid, making them ideal for investors who want to park their money safely for a short period. Capital markets, on the other hand, focus on long-term investments like stocks and bonds. These are riskier but offer higher returns. For example, if you buy shares of a company, you are investing in its long-term growth. So, whether you are looking for stability or growth, there is a market for you. Now, let's talk about some specialized markets. Forex market. This is where currencies are traded with a daily volume of $6.6 trillion. It is the largest market in the world. For example, if you are traveling to Europe and need euros, the forex market determines the exchange rate. Second, derivative market. Think futures, options, and swaps. These are used for hedging or speculation. For instance, a farmer might use futures contracts to lock in the price of wheat before the harvest. Third, commodities market. Trading physical goods like gold, oil, and agricultural products. For example, if you are investing in gold, you are participating in the commodities market. Each of these markets has its own unique dynamics and opportunities. Let's look at the global market sizes. As you can see, stock markets make up about 40% of the total, followed by forex at 35%, derivatives at 20%, and commodities at 5%. This gives you a sense of where the money flows globally. Now, let's check out some market trends. From 2010 to 2023, we have seen steady growth in stock markets, a sharp rise in derivatives post 2015, and consistent growth in forex. These trends reflect the evolving nature of global finance. Let's take a real-world example. Tesla's IPO. In 2010, Tesla raised $226 million in the primary market. Today, its shares are traded on the Nasdaq in the secondary market, and its stock price has skyrocketed. This is a perfect example of how financial markets work in action. So, why do financial markets matter? First, they drive economic growth. Second, they enable wealth creation. Third, they connect the world through global interrelation. Without financial markets, our modern economy simply wouldn't function. That's it for this video. If you have any question, drop them in the comments below. Don't forget to like, share and subscribe for more content like this. Thanks for watching and I will see you in the next video.